We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right. I never get tired of that intro. I think it's hilarious. All right, let me actually set the camera to focus a little bit. Let me move it a little bit to the right there. All right, so hope everyone's having a great day. Oh, this is not working for some reason. Hold on, let me actually restart this thing. That's weird. All right, and then no, I don't need you. I always have a problem with installing these docs. They need to make a dedicated widget. Otherwise, we wouldn't need to have all this third-party stuff, but it is what it is. Makes it overly complicated, I feel like. But I mean, I like StreamYard. StreamYard's seamless, but StreamYard doesn't have all the stuff I really need it to do for some things. Okay, so now everything's coming up. This thing, for some reason, still will not. Let's try one more time. If not, it's fine. I just really like for the chat to come up. Let's remove chat. Okay, well, it's not working today. But anyways, we'll get right into the topics. As you can see down in the description below, we have all the topics we're going to be covering. Of course, the questions will guide us through other topics that we might not have thought about, right? Because that's what these live streams are for. You guys can ask questions live, and I'll answer it live. No script at all. What's the portfolio update? No portfolio update today, although I can talk about it because I was going to wait to have a more dedicated, because to be honest, there hasn't been much, let's say, changes as far as publicly traded equities go within my personal holdings. So there are some alternate products. Those in the community know what those are. But yeah, we'll get into it a little bit, but I don't like to go into that kind of stuff on YouTube. I mentioned, for example, in passing, an alternate product that I was involved with for this year. And then there's an alternate product that I'm being involved with as of now. I've kind of been doing the setup within the community calls on Sundays. And then more, I guess I finished the position really in, I'd say, a couple weeks ago now. And it's performing well thus far. But anyways, I have some things to talk about because I think there's been a really interesting dichotomy or development within YouTube, at least. And I'm really upset with this widget right now. Not going to lie, because I really want to bring up comments. We'll try one more time. All right. And we say the chat, you're going to work? Please, no. All right. So chat's not going to work. Okay, so let's talk about deflation. Yes, that's what we're going to get into straight away. So there's been a YouTube video, and I'll actually pull up his YouTube video. Much larger creator than myself. I'm an itty bitty little tiny creator here on YouTube. But we'll talk about Meet Kevin first. All right, so Meet Kevin came out with a video, which I found rather interesting. So people, friends of mine actually sent me this because they know how I kind of feel about this. But I'll share it with you guys here, and I'll make sure desktop audio is on so you guys can actually hear it with me. And then I'll share my screen here. So here we go. This video was posted 12 hours ago. I saw it the first hour it came out because that's actually when it was sent to me. And I was about to go to sleep and I saw this and I was like, oh my gosh. All right. So anyways, the gist of this is Meet Kevin went on Black Friday, and you guys can check it out for yourself. Maybe you guys have already seen it. So he has footage here basically going and basically saying, well, they didn't let a lot of people in. But the one that's really where he was focusing on is Best Buy. A lot of inventory on Best Buy. They told him they sold half the TVs. So while this is kind of more the deflationist narrative, deflationist argument, it's not the Cathie Woodian argument, which is Cathie Wood believes that there's a severe issue with deflation on the horizon because of all the innovation. And that's how she's positioned. I put out a community post, which I think I should share the community post with you guys here today. If you haven't seen it, I invoked it to kind of see how the community felt. Let me go here, community post. So here it is. And just briefly, I'll go over it. So I forgot to post the context. The context was actually quite necessary. But I said, well, I posted this comment here, which is from the Discord conversation I had. So I want to say this to everyone here. I spoke yesterday on the deluxe call that Cathie Wood's prediction. I made the following prediction that Cathie Wood will appear right, even though she's been wrong the whole time and is wrong on the mechanism of how it will happen. I see this because of how she is positioned for it. And it's unfortunate because retail will sadly fall for her marketing, how she was right. Watch this happen, everyone. I already see the quote-unquote gurus of YouTube speaking on this. Please remember this commentary. So this was actually a couple days ago, and almost like, I mean, it's not difficult to predict, but almost right on cue, we have Meet Kevin coming out and saying it in the video. It's not in the title, but watch the video for yourself. He's already talking about how Cathie Wood was, you know, or is correct. And I don't think she is because of how she's positioned for it. So she's not ideally positioned for what is to come. And you'll see. just trust me on that. You'll see. All right, so I have a comment, and again, I'm really upset that I can't bring comments on, so I apologize for that to everyone in advance. The widget just refuses to work with me today. Unless I actually do this. Let me be stubborn, and let's see. Let's go here, and yeah, let's copy this, and let's, I guess we can delete this and apply it. And then let's see if the restart works here, because I'm very upset with it not working. All right, let's go here, re-enable it, and let's stop this. Let's press start. I'm going to try one more time. If it doesn't work, we're just going to continue the conversation. I'll read your guys' comments, and I'll read them out loud because I seriously cannot bring it up. Oh, okay. You going to work? No, it's not going to work. All right, I think I have to look in the back end to see why this widget is refusing to work. Okay, so let's see. All right, anyways, so Will P says, the deflation Cathie Wood is referring to is price deflation, not monetary deflation, right? These are two separate things. Yes, and basically what you need to understand is to distinguish between the various types of inflation, deflation. So we had a lot of supply chain driven inflation. Supply side shocks really caused a lot of the inflation that we're seeing, not monetary based inflation. Fiscal policy had a contributing factor. But anyways, again, just remember this community post. I allowed everyone to kind of share their thoughts down below. And I saw some more commentary. I also posted it on Twitter, got some responses there. But for the most part, I think it was interesting to see all the different perspectives from people. But we will see how Cathie Wood trying to kind of spin it, that she was saying it the whole time. She has been wrong for about 2 years. So she couldn't see for some reason the supply shock inflation. And then on top of that, now she was predicting, you know, deflation for like, I don't know, I guess 2 years. So a broken clock is right eventually, I guess. And yeah, but the thing is, I want you to pay attention to how she's positioned and how that will perform going forward, because she's positioned for a different kind of deflation. And there's going to be more of a demand-driven deflation. So let's see here. Cathie Wood has been calling deflation because of innovation. Yes, exactly. That's what I'm referring to. That's what I'm pointing out here. So again, and remember, this was 4 days ago, but this post was actually a screenshot I took from I think I forget what day this was posted, but it was before this post was made. So this post was made after this post. Okay, so even though it says today, it's actually before the 4 days ago. Okay, so but anyways, so kind of sticking to Meet Kevin here. Meet Kevin is basically describing demand destruction, which we've been talking about for a while, but demand destruction, you know, hold your horses there. I said in a call, and again, I'm not going to get too much into it because that's for the calls I have on Sunday, that I went over how I'm positioning myself and what specific investments I'm taking, or specific investment products I'm taking. Of course, the community members do know that one, but referring to the demand destruction narrative, that's something that we've been discussing for a while. We talked about, for example, in the conference calls of Walmart, Target, for the ones earlier in this year, the ones that just happened, kind of more confirmed, a lot of it. Even Walmart was talking about how they had a lot of wealthy individuals starting to curve their spending. And that's when you start to get a little bit concerned, when you start to see even wealthy customers start to even curve their spending. changing consumer habits. These are things that we're observing now. But anyways, the gist of it is I do believe, my personal opinion, and again, some of you already know this because we've already spoken about this in the calls, is we're going to see a very strong holiday season. I will be actually probably posting clips of these calls after the fact, okay? Because I'm going to give it like a decent time period before I begin to post those, maybe in like clips or something here on YouTube. But I think that we're going to have a decently strong holiday season for the most part, but it's going to be the final one, pretty much extended by observing just consumer credit trends. And then after the fact is when we're probably going to see what the damage has been done, okay, or the true damage. So I think Kevin here is a little bit too early, and he jumped the gun here a little bit. Now, we also have content from the likes of Financial Education. So Financial Education, he has another channel, and this was also sent to me. Let me remember. Jeremy Makes Money, whatever his last name is. And it's this one. So really a contrast to what Kevin posted. And you know what? Let's keep Kevin's video up side by side almost. So let's bring him up. Okay, let's put them next to each other. That way we can go back and forth. So again, breaking Black Friday was bad. And then Jeremy said Black Friday revenue just shattered records. Now, I'll say this, that I have it on good authority that for some retailers, Black Friday did actually break records. My wife, this is anecdotal evidence. This is actually probably the biggest mistake that Kevin did here is using anecdotal evidence here, just going to one store in one place or, other retail stores as well in one state. My wife was buying a lot of stuff on Black Friday. Guess where she was? In bed next to me. And yeah, she was buying a ton of stuff on Black Friday, just not waiting in line, and we could be in the comfort of our own home. Well, anecdotal evidence there. No, but I think that we're going to see a decently strong holiday season, but that's going to be like the final push of sorts. But I found this to be, interesting. This was posted 11 hours ago in contrast to this one that was posted 13 hours ago. So complete two opposite takes on this. Funny enough, I think that, Jeremy's going off of other people's information. He's going off of people like, whatchamacallit, I think CNBC or Bloomberg articles here, so it's not even his research. Oh, that's funny. I could see all the conversations he has. Broke the record highs or lows? LOL. No, broke record highs. And then some people were talking about, well, the adjustment for inflation number, it's a bit less good. I really don't get why we care about consumer spending. Humanity is doomed. AI is the future. Yeah. What is your opinion on BJ's? Thinking of investing there because Costco is expensive. I like BJ's. We've talked about it before in the community, but I haven't really looked at it too much to give a solid opinion, unfortunately. Lafufu's dividend portfolio or Paul's Value Trap portfolio? No, honestly, I'll say Lafufu's dividend portfolio over Paul's Value Trap portfolio. No, Paul's quite literally one of the most... Because the issue with that guy is he thinks he's intelligent. He's really confident in himself too, and I see almost no difference truly between the two. They're just like two sides of the same coin. So, but remember, the thing is, I gotta give it to Jeremy in this case. He came out with that video where he basically is saying, it was like a humbling moment for him. Paul thinks he's like LeBron James. Literally his quote, he thinks is LeBron James, which is rather hilarious because oh my God, he's underperforming the market even in a downturn as a quote unquote value investor, which I don't think he even knows what a value investor even is. Been looking at a bunch of regional banks currently, wondering if you have heard of Hingman Institution for Savings. No, I haven't. That's the Californian bank, correct, Ricky? Let me know if that's the Californian bank. Capital Mindset, what do you think of YY stock? They pay 7% dividend, 2% buyback yield. Haven't looked into YY yet. Well, not yet, ever. Can you imagine people who follow both me, Kevin, and Jeremy are probably confused and mixed signals? Yeah, but I mean, at the same time, if they're using them as any form of like, you know, investment research, which is part of the topic, that's part of the topic of today's video. I was going to wait. I'm going to have a dedicated video to this, but I want to really get into this. And you know what? Maybe we'll get into it now, and then I'll circle back to the other topics. So I want to just say real quick for a moment. So Meet Kevin and Jeremy Financial Education, all the complaints that all of you guys have of them, at the end of the day, they are your creation. And I've stated this in the past before, but like, they are your creation, not you guys, the Capital Mindset community, but the YouTube community. And they're just a reflection. They're just a mirror of what YouTube is, and what people truly desire and want. So they are to blame, yes, but also YouTube itself, not the business, but the community, the people on YouTube who watch YouTube, they are just as equally to blame. And for the next generation of Kevins and Jeremys, they're equally to blame for that. They won't learn their lesson. History will probably rhyme. You know, just imagine like a financial YouTuber who actually makes a lot of money from their investments for once, instead of selling a course, or like, I always found it intriguing for, you know, people to think that if there is, or if they have it, let's say the true secret sauce to make a lot of money, that it would be so easily and readily shared for $1,000. I think that's funny. But, you know, people have dreams, I guess, and people want the secret sauce, the secret to break into that world, I guess. And, you know, they'll have to learn for themselves, I guess. I don't really care anymore. I thought you were going to stream in your bathrobe. No, maybe one day. When I'm truly, like, Strongman's really trying to blackpill me on YouTube. When I should define what he means by blackpill when he talks to me. What he means by blackpill is just the acceptance that YouTube will forever be the cesspit of degeneracy, or a cesspool of degeneracy, and there's nothing that can be done to change it. That's what I refer to when he's trying to give me the black pill. Once I fully embrace it, then you might see me coming out on a bathrobe. That's how you know I've accepted it, if I'm coming out on a bathrobe. Okay, so have we done installed building products? Yes, actually, I have, and I've spoken that on some calls on the Discord community. So Torre. So one of lesser known business that's actually boring and actually has returned a lot of capital to shareholders, has had incredible returns actually, relative to the market. So good shout out, by the way. Kevin Wine said, what do you think of Buffett buying Taiwan Semiconductor? I think it makes sense. But the thing is, I saw, well, I didn't really see the video, but I saw a clip of the video that was sent to me that I thought was hilarious. Someone made it like a really weird take that he somehow knows some insider information when it was publicly available knowledge that Taiwan Semiconductor was building fabs here in the United States. But anyways, I think, it's a good way to get exposure to that. There's other ways to get exposure to that too. There's other businesses that are doing that too, but, solid business was a decent price. But not really my cup of tea. The secret sauce to the market is time in and compounding. But that's not what people want to hear, Dan. That implies effort. That implies waiting. That implies patience. That is definitely not what YouTubers or the YouTube audience wants. The YouTube audience rewards fast-paced jiggling of the keys, fast editing. That's what they reward. And that's, like, at the end of the day, what they'll get. So they'll get what they wished for, is what I'm trying to say. And that's the topic that I'm going to kind of start with. YouTube, and I'm not going to change. I'm not going to change the way I do things on YouTube. It is what it is. This is a hobby, and that's about it. But YouTube, I think, rewards it rewards the entertainment value, not so much the content value. So the content value takes the backseat to that. And again, that is entirely the viewer's fault if they fall for it and they, get burned by it. Entirely their fault. Now, the creator themselves has blame as well because, they, let's say, promote things that maybe they shouldn't be promoting, etc., or whatever. That's a separate conversation that can be had. So my investment idea, let me just say real quick, for example, even Everything Money, I saw it was kind of funny that a lot of people who left, FE, financial education, went to EM. And I'm like, oh, well, into one fire and out into another fire. Well, good luck. You get what you deserve there. um, so my investment idea is to buy TTCF products I can get before the company goes BK and sell its products at least 5 times. Oh, okay, you're gonna do like a liquidation sale. Someone says YouTube is all about hype. Yeah, well, yeah. Get to the point. Yeah, no. The point is just it's your fault. Not you guys, but you know what I mean. The broader YouTube audience. I actually like the longer form content. No, I know. And I like the longer form content. I like the live streams. I like being able to come on here and people ask questions live. And so you can kind of really distinguish whether or not, the information, like it's not prepared or anything like that. So it's up to you to really make the judge of that. Just to summarize, holiday sales will be the last gasp of a dying breath. Yes. Sorry. If that's what you meant by summarizing, yes. Summation, we're going to see probably the last gasp of breath. And by the way, Wilpie, I think you can see the call. Go check out the call, the first 30 to 40 minutes. I just get into all of that and basically discuss that and the positioning, how I'm kind of handling it and what I'm doing to kind of maximize the gains for the next year. So, and by the way, I just want to warn everyone here, because I said this in the chats for the community. I'm going to meme this. Just know that I'm joking. But I have an account that's a smaller account. Well, depends on what you define as small. But I have an account that is a smaller account. And the annualized rate of return has been absolutely ridiculous. When I showed you guys the full returns of all my accounts together, this account is included in there, but it's a small portion. If I can only imagine what it would look like if this was like my entire account. Well, it would be pretty awesome if it was my entire account, but it has annualized rates of return that are absolutely ridiculous, and I'm going to be memeing it. Just note that I'm going to be very sarcastic on purpose, and maybe I'll add a disclaimer at the bottom that it's like not my full account, even though maybe some people might perceive it. Hopefully they don't, but I'm letting you guys know in advance that's going to be a joke. And the annualized rates of return do look fantastic, but yeah, it's not the account. Oh, you already know. Yeah, it is the Schwab account. So my Charles Schwab account. It's just funny that how well it's done. Opinion on HIFS Bank. We can check out HIFS Bank. Let me actually pull up. By the way, my arms are absolutely destroyed right now, so I'm like moving in 90-degree angles. Okay. Oh wow, this is a tiny bank. I really haven't looked into this bank. Let me see what they really focus on. So, HIFS Bank. Let's see. Hingman Institutions for Savings. All right, what is it that they focus on? Let's see. Hingman Savings Institutions, various financial products, services, individual business in the United States, savings, checkings, negotiations, orders, withdrawals. Okay, so it's just a small bank, and it's located. All right, cool. Let's see. Some of these smaller banks, I got to figure out what do they focus on. Business checking, commercial real estate lending. Okay. So they're probably heavily exposed to their local market. So I'm going to have to, and they're California based. I can see that. Government banking, startup banking, about us, team locations, case studies, careers, case studies. Let's go here. Let's see. Our customers. Okay, so I was about to say that word out loud, but I feel like that would not resonate well. Oh, let me show you what I'm seeing here. Okay, so I have to check out like their net interest margin, stuff like that. Let me look at it here on the back end. I mean, book value's constantly been on the rise, so that's fine. That's good. I mean, that's not fine. That's good. Tangible value. I mean, they're trading at a premium, but historically they've almost always been at a premium, except for a Great Recession. But post Great Recession, they've always been at a premium to book. Right now, though, they're kind of coming back down more to the lower side of their book. So basically, the market's multiple has been contracting. let's see. I mean, I guess the market's kind of, they've been growing, but the contraction itself, market's probably concerned about 2023. What are they involved in? Commercial real estate lending. Yeah. I don't know if it's a lot of office real estate. It's probably a lot of office real estate, but someone's making up, Manash, are you making up a rumor that I own 5% of a penny stock? Conflict of interest. Yeah, no. Yeah, that's totally true. I own 5% of a penny stock entirely. My portfolio is not that big, guys. I know you're joking though. Hangman is. I mean, but they've been having strong lending growth throughout the whole year. So net interest margin's been kind of weak. All right, I'd have to look at this, but I'd probably make a video on this. I mean, it's kind of at that perfect size that if it's like a small, beautiful niche bank that's really efficient, really effective, might be an interesting position, especially if we see any weakness potentially in the stock. It is down 28%. So actually, I didn't even bring this up here. So let me show you guys here on the live stream. So the company's actually, well, it looks good on the one-day chart. Buy it on the one-day chart, guys. No, I'm just kidding. But yeah, on the year chart, you see it's down 27.40%. Year to date, it's down 32.31%. But more recently, it's kind of been rallying. So, this could have been the bottom because remember, the market tries to price in the forward earnings. So let's see. Kind of larger picture here. I think that's actually underperformed, though, the market. Because the 5-year, I'm pretty sure VU's actually had outperformance here. Yeah, it's outperformed it drastically. I'm talking about the index has outperformed this. So, but that's not indicative of future performance, but, it's what would be the catalyst? I'd have to really pay attention or figure out why. Why would I take on this excess risk of an individual stock over just buying this index? My alternative. Capital mindset, my portfolio isn't that large. Proceeds to buy 60K of AJR in one day. I did not even realize I actually said that in the video, but I shouldn't even be talking about that video. I might even private that video. I don't know. Whatever. It doesn't matter. I got 60% cash since January. I'm the next Warren Buffett, guys. JK. I mean, yeah, he is pretty much a lot of cash. I don't know, oil going up or oil going down? No, but oil has been going down. I mean, the thing is, I sold my oil stocks and the oil stocks kept going up. But, it goes to show you, I played with the soap there. But I made a lot of gains on my oil stocks. It's just, I could have made even more gains. Like, let's check out ConocoPhillips. It hurts me every time. I don't want to know. Okay, no. It's not like even higher. But last time I checked was like 130. So, but I was like, oh no, please no more. But no, I got out of ConocoPhillips and I was basically, if you go back to check out the videos of me kind of, I slowly got out of ConocoPhillips and then all at once at one point. So you can go back into the channel and you can see all the videos, me discussing my thought process behind exiting ConocoPhillips. And then you can kind of be the judge of that, whether or not it was right or wrong. Has it aged well? Has it not aged well? And that's the point of it. And I try to put it, I think it might be updated on the content library. So check out the content library. That's supposed to make it easy for people to access my older videos. So you can really kind of, I'm not trying to shy away from them. So you can very much check them out yourself. And they're organized by ticker symbol, by date, etc. So it's supposed to make things easy. Anyways, I own only oil stocks, which has gone down over the last weeks. Well, maybe, I don't know, maybe it's indicative of something. Please take a quick look at MDT. Let's take a look at MDT. Oh, Medtronic. Yeah, I know Medtronic. So Medtronic's gone nowhere, by the way, past 5 years. Nowhere past 5 years. So I've looked at Medtronic here and there in the past, and basically, like, you have a blue chip, a little bit less efficient, less desirable than something like Abbott Laboratories, or even Johnson & Johnson's arm as far as business goes. But, solid business overall. Like, we are comparing against really high quality businesses. Usually trades at a premium to market. I think it's still at a premium to market. A lot of dividend investors or dividend growth investors really like Medtronic because of its very stable business. Really doesn't care about what environment we're really in. Of course, during the pandemic, it was a bit, overhyped. Like, you're getting now, of course, 40% down. You're basically getting the same price as you would have paid in 2018, which is kind of ridiculous when you think about it that way. But there's a lot of stocks that are like that right now. Even I say, 2015. Yeah, it has gone nowhere since 2015. So all of your gains have basically been from the dividend since 2015, which is you wouldn't be very happy. Same thing with Walt Disney World, by the way. I've talked about Disney. I have an update video on Disney. So let's actually, I don't want to get too much into Walt Disney and kind of look at Medtronic more, but Walt Disney, I just want to point out, since about 2015, 2014 has really gone nowhere. They don't have a dividend anymore, but again, most of your gains would probably been from the dividend itself. All right, but going back to Medtronic. Medtronic, last time I checked, is pretty well capitalized. We'll check for ourselves to see the most updated Q quarterly filings. Investors. By the way, I'm not going to stay on live stream too long because I do have a friend to go visit, actually. Let's see here. Where is the investors? I'm going to have to invest. Okay, so I'm going to have to go a different route. I hate when companies don't have the location just right then and there. So let's go to quarterly earnings. Let's go to I just want your PDF. Give me your PDF. I'll just click on your financial statements. Give me that. It's fine. All right. Cost of sale, net sales, cost of sales. Yeah, it's still same story as before. Slow growth. Actually declined growth there. Not declining growth. Contraction. Sorry. Wrong use of the word. Give me your balance sheets. Balance sheets, everyone. I think Strongman, I saw you in the comment section. You're still here. Yeah, that added joke is still strong. Balance sheets. All right, so cash equivalents, $4 billion. I mean, last time I checked, yeah, they're still well capitalized. This is like not a problem at all, given where the business is at. But really, what are you getting with this company? You're basically, I mean, I get it if you're like a dividend growth investor. You're really looking at this from that perspective. A solid growing dividend that's pretty safe, probably going to keep growing here and there over a long period of time. You're probably going to get, at these prices, I would suspect, but I'm kind of shooting into the dark here, lower volatility. The market's not really going to, or at least the business itself I wouldn't expect it. I'd be surprised. I'm not saying it couldn't happen, but I'd be surprised if it severely deteriorated from here. There are other alternatives, though. I'll just point them out. So like Abbott Labs, ABT, Johnson & Johnson. Oh, no. So ABT. Also, you have J&J. Johnson & Johnson, you're getting a bunch of other businesses. They're spinning off their consumer division, but you're also getting the medical devices business. You're getting the pharmaceutical division. I guess it didn't want to do it. I have to click it. Better. All right, but Johnson & Johnson, even they've outperformed Medtronic, but Johnson & Johnson hasn't done or fared much better than the market as well. It's actually underperformed the market. Well, when you include dividends, it probably got closer, but still underperformed. Again, if you're looking at it from that volatility aspect, Johnson & Johnson's actually performed the best. Abbott Labs has actually course corrected here, but has actually outperformed the market over that period of time. So the general consensus when people ask or talk about this industry is that Abbott is the best of the blue chips here. Also trades expensive typically, but had a lot of interesting products that they brought to market over the past couple of years that has really, I guess you could say, made the multiple deserving. But usually all of these medical device companies do trade at that premium. Johnson & Johnson, I think, trades at the lowest premium of these guys because they have these other businesses tied to them. If they were just the medical devices business, I assume that business alone would probably trade at a similar multiple to Abbott Labs and Medtronic, which actually is something that some investors are really thinking about to unlock value because the different businesses separated might actually have more value than all together. However, I've also spoken to some investors who really don't want that to happen. They really like the all-weather portfolio of Johnson & Johnson. Forgive my use of the word all-weather portfolio, that it has because it has pharmacology, It also has, for the sake, medical devices, and also a consumer products division, a consumer non-cyclical division. So my grocery prices are going down. Is rent going down? Talk about deflation expectations you foresee. So I've spoken a little bit about it, but I didn't talk about rents yet. So rents, that would take a while for it to slow down, but that's not the deflation. So it's about what does that mean for things? So if certain costs, if certain necessities, food, housing, shelter, shelter and housing, food, energy, and housing, kind of remain elevated, what does that mean for discretionary goods, discretionary products? We talked about it when we looked at Best Buy way back when. Go check out that video on Best Buy, and you'll get my color on that. Look for any videos with the title in it, demand destruction. Some videos don't have that in the title, unfortunately. That's my fault. That is my fault. And they also don't have it in the description. That's my fault. Again, my fault for not organizing things better, titling things better. But there's also a lot of live streams where we get into that. But for sure, for example, I go into that in the Best Buy video, because Best Buy is going to be a prime example of kind of observing that discretionary spend come down. Walmart's been saying that. Target's been saying that. So if you have a huge rental glut, let's call it that, then they don't lower the prices, for example, or prices take a little bit longer to kind of come down in the rental markets, if they even do. What does that mean for that extra spending for consumers? Well, it means they have less. If the energy doesn't come down as much as you would think, that means you have less. But the thing is, I think a lot of the damage has been done in terms of removing or destroying the savings of consumers. Right now, if you look at consumer credit lines, they've still been expanding. But the thing is, you've already started to see signs. They've already shown that banks are starting to pull back on some of this. And that's kind of what's going to be projected. It takes some time for this to show up in the real economy. And this is irrespective of what the Fed does. I often tell the subscribers and the community members that I don't really pay attention too much to the Fed as much as people out there think. And I think a lot of credence is really put on the Fed when it otherwise really shouldn't be. But they're always going to be late to the party. So if you're really just following the Fed, you're also following a late actor, and you're always going to be just late to the party. Now, all this being said, by the way, is just if you're trying to optimize your performance, but you don't really need to be doing any of this, because as you could say, or as you could see, you really can just dollar cost average into low cost index funds. And none of this should matter, because as long as you're just continually adding, you're kind of going to go through the ebbs and flows of things. But I really wanted to bring up something, because this guy is absolutely hilarious. And let's see. Oh, I got a super chat. Thanks, Echoes from above. Keep up the fantastic work. Will do. Unfortunately, my widget's not working, so I can't even bring up your comment, but thank you, Echoes. I shall. I joke around that I'm like going to get blackpilled and like stop all YouTube and stuff, but it's fun for me, and it's like a good I don't know, I like the community that I've built around in Capital Mindset. I think it's a really solid group of people. Okay, so ignore Fed. Yeah, I see. Oh my gosh, what is this? Oh no, I haven't seen you in a while. Meet Steps, sis. I won't say the rest of it out loud. What's nice about Abbott is they spend almost no money. It's almost legacy drugs, and new products are usually built off of old patents. AbbVie, which is branched off, yes, AbbVie's in the portfolio. Love AbbVie. Branched off newer drugs and bigger spender. Yes, and the thing about AbbVie's been a great return thus far in the portfolio. I mean, the returns I've made, including dividends, have been insane. Very happy with that. I've not been reinvesting the dividends, just kind of reinvesting it into other stocks. But when you include the dividends not reinvested, but dividends as part of the return, it's been even higher than what shows in the actual portfolio that you guys see, because I haven't been reinvesting the dividends. So I haven't been ruining my cost basis. My cost base is kept nicely. And I usually say that, okay, the market is pretty efficient when it comes to actually making sure that all information is priced in. Yes. And you'll have moments in time where the market will panic for whatever reason. And AbbVie, I still haven't made the video on AbbVie because it's going to be backwards looking. So I kind of question the value added it provides. But I think it's going to be good still if I end up making this video to kind of talk about like a case study of when the market really panicked about a stock, not really digesting what it meant to acquire Allergan. Because if you guys have been invested in AbbVie for a while, again, there's a lot of newer investors in the market. But back in the day, AbbVie acquired Allergan for a lot of money. And the market really didn't like that acquisition, and that was your moment to pounce. Because you kind of look at what Allergan was bringing to the table. They had their legacy drugs, their pipeline. So with all that together, it kind of made sense why AbbVie was doing that. And you know that AbbVie had some major drugs that were coming offline or coming off patent in both Europe and then later in the United States, which would still take some time because a lot of people sometimes panic too much as far as when things come off patent, because you still have branding power. So when you see like the trend of sales when something comes off patent, it doesn't just fall off all of a sudden off a cliff. There are some examples of that. Actually, there's a decent amount of examples, but not all drugs follow that same trajectory at all. In fact, there's a lot of drugs that don't follow that. They kind of just slowly die off or slowly come off. And it takes some time for the other ones to ramp up. So it's not all of a sudden immediate, although sometimes it can be. It just depends on the complexity of the drug. And I am by no means an expert in that field. It's just from my conversations I've had with people who are more involved in that field. And I just had a conversation with an interesting fellow about another smaller, more speculative one that I might be adding to my speculative side of the portfolio in the near future. But no comment on it yet because I'm still doing my research. I've always felt like pharmaceuticals and the like are out of my circle of competence. Yeah, and you don't need to be involved in pharmaceuticals. There's plenty of other stocks. Like I said in the banking video, if you haven't checked out the SoFi video, check out the SoFi video. I gave a message that banks are notoriously difficult to value, and investors don't need banks, don't need to invest in banks. You don't need it. It's not necessary. It's not required. And I think that as an entity, you can be very successful as an investor, never touching a bank, ever. And some of you, after watching some of my banking videos in the past, I've seen your comments. I remember your comments. You guys have said as such. You guys have said, well, these entities, yeah, they're too overly complicated. There's so much I have to worry about. I'm not going to invest in it. And that's great. That's great, right? You got to figure out like what is your passion. There's some of among you that I've spoken to that your passion is pharmaceutical companies. That's your thing. And you have stated to me as such, you guys know who you are, that you have a background in this, and that's, you joke around that it's like, oh, I'm putting my degree to use, which I always find funny, by the way, when you say that. Okay, so I got another one, fight the Fed. Fuhat, you're sending me a donation to build out an army to fight the Fed, I see. Don't worry, I'll put it to good use to fight the Fed. Will you invite a guest to your podcast in the future or have a debate between you and Robert Reynolds? That was supposed to happen. Yes, well, I'd love to have Robert on. If you guys as kind of like the... He came off YouTube and that's why it never happened. But in all honesty, I'll have anyone who's of good spirit on the podcast or on the show, on this live stream. And anything that would, I think, bring good conversation. It's a very open... you could say podcast. Believe it or not, it's very open. If people ask, then they can come on. So, yeah, but I'd be down if you let me know of anyone that you really want to see on here. Of course, the thing is, for a lot of people, this is like their business. So it has to be like something in it for them. You know what I mean? I'm not saying that that's the case for Robert at all. I'm saying that's the case for some. And so you got to consider that too. So if they're a very large channel, remember, this is how they make their money. This is it. This is their business. So if they're coming on to another channel, they have to think about, well, does that bring me more exposure? Is it worth it? What kind of audience does that person have, et cetera? All that's kind of brought into mind. So keep that in mind. My best friend so far has been an SBNY, market fearful about the stereotype. That is a crypto bank. Oh, no. Consistently growing book value, lending growth, 100% organic. Thoughts on SBNY? Well, it just depends on what they're doing on their books. So are they lending it out into these other derivative assets? If so, I wouldn't touch it with a 10-foot pole. If not, if they're kind of just being a custodian of sorts and that's about it, and then deriving fees in that way, with less exciting, harder to attract people to put their money in there, or their crypto assets in there, then yeah. Because I've talked about crypto brokers in the past and how they would be affected in the liquidity crunch. That's aged really well. So go check out those videos. But of course, they don't provide you value now that they're bankrupt, but they provided value back in the day when they weren't bankrupt. I also got a super chat from Kingdom Finance. Thank you for the Canadian dollar. The Monopoly. I'm joking. It's not Monopoly money. Let's see here. Bob Smith got 40K on puts early this year. My man, what is going on? Fabio, do the waffling. I don't know what that means. I think what most important about Avi is going forward is interest rates. They have a ton of floating debt due to the acquisition they made. They do to Humara expiring. Yeah, and by the way, I'll say this. I don't think rates are more likely than not going to probably come down. But more on that, I guess, in another video. Robert has a new YouTube now. I think he would be open to talk. He just doesn't want to produce not a financial advice bro content that is popular. Oh, if that's what he wants, then he's exactly the type of person I really want to have conversations with. So, yeah, no, if you guys want it to happen, what I say is like an encouragement. So I'm already down. If you guys reach out to him and also try to say, hey, Capital Mindset's still interested in content, you guys can do that. And that kind of helps out build the bridge, so to speak, because then it lets the creator know if that's actually their intention. That's great, because then it lets the creator know that, okay, their audience kind of wants it. My audience kind of wants it. It's basically what you guys are saying. I'll reach out, and then I'll see if he wants to actually do it. So Capital Mindset, what's your cash percentage? My cash percentage has gone down drastically. So last time you guys asked me this, you guys know what the percentage was. It was a big percentage overall. And now it's come down drastically as I've built out big positions in either publicly traded equities, and also I've reduced the cash position by investing in a partnership with a friend of mine, and as well as building out a alternative asset position, which you guys know about as well. The alternative asset, I just don't mention it on YouTube too much. I'll mention it in passing because I'm very cautious about those, because even though, no matter what I say, people might, follow me into that. And yeah. What's your take on home builders? My home builder take is still pretty much the same. I try to make, like, this whole year, some home builders are getting onto the shopping list. So, like, for example, I'll tell you one that I'm thinking about, right? Nothing is certain. Okay, Meritage Homes is one that's kind of on the list, and I'm not buying this. I haven't finished my research on it, but it's on the shopping cart. So should I see a lot of weakness, I might like to pick up something like this. But I'm looking for like the smaller ones that have a different advantage. They're not as leveraged or exposed as some others, but there's other businesses within this line that I might be interested in as well. Okay, so trying to see Swedish moves, Canadian moves. I'm collecting. By the way, what's your thoughts on corporate bonds, long-term 20 to 30-year grade A debt? So I could see the case that you would make for it, but I'm kind of going to be more focused on. Maybe you're asking that question because you know where this was going, but I'm more so going into government debt, but I could see the case being made. The reason why I'm going for more government debt is because they're used as a tool beyond simply an investment. And but yeah, I could see the case being made for corporate bonds, depending on, like, you're talking about safer ones, so grade A debt, so much safer corporate bonds. If you're like more. If you're trying to lower perhaps the volatility of your portfolio, depending on like how old you are, as a serious investment to actually hold to maturity, why not? I don't know. Maybe you're gonna find it useful. Are you still adding to your realty income stock? Yes, I am, Greystone, but it's kind of slowly adding in, and I'm only adding it in my retirement account, because if I were to add it in my non-retirement account, it would mess me up with my taxes. So I have to keep that, basically keep clear of putting too much of REITs or REITs at all in non-retirement accounts. By placing them in retirement accounts, I can avoid the income tax consequences of the dividend. But you guys already know that. So I've been buying Apple and IBM lately, 20 to 30 years, 6% plus yield. I don't like long-term treasury, still under 4%. Is Fabio buying farmland that is asset he's talking about? No, it's not a farmland. No, again, like if you're trying to reduce the volatility of your portfolio, if you're kind of ascribing to kind of that strategy, I could see the case being made for it. And, those are solid businesses. I don't think IBM or Apple, you said Apple, right? Yeah, you said Apple. Are going anywhere. Apple even more so. I think some people think IBM will, but I don't know. So let's see here. I'm buying farmland in the metaverse. I got text message here. Someone asked the wrong question in the text message. Let's see. Axon. I haven't looked at Axon in a while, but last time I checked, I mean, looks like a solid business. Blackstone, not really too interested in adding or buying that one yet. Reservations about Buffett dumping all of his IBM. No, he just wanted someone could sell a stock for a million reasons, right? But I think he just realized that it's not really in a circle of competence. He didn't really understand where the business was going longer term, and he just didn't want to participate in it. And all in all, I think solid move. He's done really well with Apple, so solid move. Just a pinch. Kingdom of Finance. I like finance and investing information, but I also like a little bit of degeneracy. Just a pinch. Yeah, just a pinch. But that's referring to someone else. I like Apple debt. Been trading around 70 cents on the dollar. 20 to 30 year debt. Well, keep in mind. So remember, guys, when you're buying bonds, you want to be cautious about the risk that rates continue to rise. That's like your main risk. If you're holding to maturity, you're worried about default. That's the main risk that you're worried about, default risk, if you're holding to maturity. But if you're not holding maturity and that's not your purpose for investing in the debt, you got to keep in mind that if rates continue to rise, you're going to have capital loss. You're going to be forced to hold it to maturity, essentially. But if you think rates are, we're at the top end or maybe, some place of stability in terms of where rates are at, then it could actually lower the volatility of your portfolio. Again, you could be even trying to, let's say, hold it still to maturity, or maybe you're actually doing it as a trade, in which case the longer duration bonds are going to give a little bit more exposure. Now, if you're thinking about just lowering the volatility overall but still producing yield, it's probably best to kind of focus on either shorter duration investments in that field. So there's actually good content out there that you can learn about, for example, brokered CDs. So it gives you the flexibility. There are risks to brokered CDs, but it gives you the flexibility, and you can kind of customize and buy into brokered CDs at all these different kinds of durations. But check out your broker. Your broker, when you go to buy a CD, you'll see what I'm talking about. And that could be a way to kind of generate some extra yield that you otherwise wouldn't be getting in your savings account. And, that's nearly as safe as you can possibly get before getting into treasuries, right? Brokered CDs or CDs as a whole. So, yeah. They're not without risk. And keep in mind, again, depending on how you're involving yourself with it, what are your goals? When are you trying to get out? What are you trying to do with it? Hold it to maturity, not hold it to maturity. Just keep in mind and really look into that. Pay attention to that. I want to actually have a bit of comedy and fun here. So I want to show you this guy because I just think it's funny. I applaud you guys in the community who really got me into this whole thing, and you guys send me this, and it's hilarious. I laugh every time. So this is a parody account, Pedro Saxena, and he parodies this guy, Peru Saxena. Peru Saxena is actually hilarious. So he used to actually, I think, manage money, and then he claims to have stopped managing money so that he can invest on his own. I think maybe potentially they pulled out their money. I don't know. Maybe it wasn't voluntary, but let's just read this. My brother Peru is calling for a stock market bust after he held his secular growers during the entire drawdown. And that's true. So basically, this Peru guy, he held a lot of speculative assets during the entirety of time where, let's just say, the market was coming down, right? He didn't see any of it coming. He didn't see the liquidity crunch coming. He didn't see any of that coming. And he held a lot of interesting assets. In fact, let's actually go back and see, because I think this account is really good because it actually keeps him humble. Well, it doesn't keep him humble, but it at least keeps track of everything that he does. So I'm trying to find the actual assets he held at one point. Let's see here. Yeah, so basically he got out of his assets. This is important to keep in mind. So thanks. I made a mess out of 2022. Too early to reinvest. I didn't see the persistent inflation / Russia war and fought the Fed. It's not about fighting the Fed, by the way. Again, if you're kind of just not fighting the Fed, you're grabbing onto something that's following something else. I've seen the light and now made adjustments. He's made adjustments at the wrong time. Classic FOMO. Cash and shorting NDX futures. Since then, he's actually down a lot. And so he sold out all of his assets at a loss. And now he's down even further on however much percentages shorting NDX futures has gone to. Oh, you're probably joking. I see Nash, you gave me 2 super chats. The first one had no comment. The second one, I think, is part of the joke. So if you guys don't follow me on Twitter, you guys can follow me on Twitter. I tweeted out a joke, but also it's kind of like not a joke. I think it's going to age well. But I kind of referred to, I made a tweet that said, begin phase 2, because kind of the theme of 2022 has been like the liquidity crunch on this channel. And then now when I say phase 2, I'm saying like the next phase. And again, Nash knows exactly how I'm positioned for phase 2. So we'll see how it ages, because, you know, Nash, you're like, I could be wrong, but we'll see if I'm absolutely right. And if I'm absolutely right, then I get bragging rights, of course. And of course, well, the bragging rights, I don't need to brag. It's just my portfolio will do well and I'll have a lot more money. So this is his portfolio before. So again, really funny. Again, this is the fun side of the stream. So we're just having fun here. Mid-month portfolio snapshot. So this is basically, this stuff, short NDX futures. And he still had the short. So it's kind of like a long short portfolio. But he had a lot of, I think a lot of these actually rallied after he sold. And he's short lucid here. Yeah. Anyways, point being, he's kind of strangely positioning himself at the wrong time. Someone's asking portfolio update. You'll get a portfolio update, but again, the alternative assets don't show up in the portfolio update. I kind of just discuss those in a more private setting, not here on YouTube. I don't discuss those out of just an abundance, I believe, of responsibility. Remember, keep in mind, guys, do you remember when I said I was going to do the last portfolio update and the reasoning behind that? It's because here on YouTube, I had to be, just aware and cognizant, and I was going to heavily concentrate my portfolio. That was the announcement. And then I subsequently said, okay, well, people were asking if I could bring it back, and I put it to a vote. Overwhelmingly, everyone voted yes, except for actually a decent sized percentage. I think it was like 9% of the voters. But there were a lot of votes. And so I brought it back under the presumptive social contract between us that, you take it as at the very maximum, some sort of distant inspiration, but not as something to copy, because it could just as easily go poorly for me. So, yeah. Does gold become a liquid asset at very high time? That's a good joke. Bro, what the fuck is this portfolio? LOL. No, that's what I'm saying. That's what I'm saying, Kingdom. So, this guy switched his portfolio at the wrong time entirely. Let me just actually, I gotta see this. Okay, so one other topic before I finish off the live stream is really getting into kind of going forward. What am I kind of doing? Oh my gosh, there's I did not see that. There's Saxena. Wow. Well, so going forward, I'm going to be probably, I'm actually still now rebuilding my cash position, my savings, after all the deployment that I've done. But I'm still kind of also dollar cost averaging and investing. There is one investment that will show up in the portfolio update. That's kind of another equity that I've added. So it's in the financial fintech space. It's in the fintech space, and I've added it recently. I'm actually really excited. I'm up on the position slightly. So hopefully I get that portfolio update sooner rather than later. And then I'll talk about the investment, why. And I have been kind of just trimming some positions. Haven't really made any big sales yet. Aside from, well, yeah, nothing's really changed that much from the last portfolio update. Again, guys, like my portfolio doesn't change normally all too much. 2022 has been a more active year than normal. But yeah, and, typically I like to have a low activity, kind of just relax, make my investments, focus on, making some money, and really trying to hone in on what I think is a good step moving forward. How much of your portfolio do you have in phase 2? I'd say last time I checked, it's 30 something percent in phase 2-ish, phase 2-ish, whatever we want to call it. So it should do well, and it should shield the portfolio, if I'm right. And also, phase 2 is separated into 2 different products. So what about PYPL? No, I'm not in that. All in honest because Fabio has a crush on Jessica Alba. No, actually, she's not my type. But that's probably entirely why a certain someone is invested in it. SoFi. No, it's not SoFi. There is an update on SoFi. If you guys haven't check out the update on SoFi. By the way, I don't like to do updates on stocks too much unless they kind of reach the price targets or fair values, quote unquote, that I had listed beforehand. That's what SoFi did. SoFi landed at the fair value mark. And keep in mind, the comments I get sometimes on these older videos are kind of funny because they age like fine wine. I want to do eventually an update on Arrival stock because Arrival's actually come down so much, and you got to go check out the video, if not just for the entertainment factor, in the comments section. You guys, I believe you guys will be thoroughly entertained, and then always pay attention to the dates I publish a video. Pay attention to the dates. I think the dates are really important, and at the end of the day, that's what this YouTube channel is about. Is like I publish these ideas, these thoughts, and the date matters in which I say them. And then so go check it out. And of course, I was kind of late to Arrival, but you can kind of see from how I've spoken about things in the past, you can kind of presume what I would have thought about Arrival back in the day. But even then, even from the date of that video, after it's fallen so much, it fell yet another, I think like 70%. But go back and read through the comments section. There was someone, I think, who said there that they were like, they put like 15K into Arrival at that price. Absolutely bonkers. I mean, 15K is 15K, guys. You can have a nice vacation with $15,000. A very nice vacation. For some people, that's their entire portfolio. And again, I'm assuming it's a YouTube comment. That's true. You know how it is, like Seeking Alpha, YouTube comments. You have all those people just like saying, oh, I put like blah, blah, blah amount into, and you know, they probably didn't. They probably, I don't know. But anyways, so let's see here. Hey, whoa. Someone's shouting out names. Don't spoil things. Don't spoil. You know who you are. But PayPal, I thought about it. No, Dan, you boomer. SoFi is the AWS of finance. Yeah. Yeah. Dan, I'm with you. Well, the thing is, I also, if we're going to talk about SoFi, I accept that people made the mistake. And I think it's fair to say that making the mistake on investing in SoFi is acceptable because banking products or banking stocks are very difficult as an asset class as a whole. And I say it yet again. I'll say it again here. If you don't feel comfortable investing in bank stocks, don't invest in bank stocks. Just don't. You can do really fine just avoiding them entirely. Just avoid them entirely. But as an asset class, bank stocks and insurance stocks can be very difficult entities to really value. They just are. They are very difficult. And there's a lot of books you can read out there that kind of give you an idea. But even then, it's really difficult because there's so many moving parts inside of a bank. And, you know, you could be wrong. There could be something that they're so over leveraged in that you had no idea, you didn't see it coming. And when that blows up in their face, like the whole bank collapses, for example, right? So even with these crypto brokers, I think the crypto brokers were easier to spot, by the way. But when we looked at, for example, Voyager Digital, before they went bankrupt, I know a lot of people came out after they went bankrupt and talked about it, but before they went bankrupt, check out the video. It's like an hour. I always shout it out because the information in there still pertains to all crypto brokers. But check out the part where I start talking about counterparty risk. I think that's a good section to really focus in on. And there was one analyst. I shouted them out in the video itself. But there's one analyst that I found was really on the ball as far as asking questions to the management team that were really hard-hitting questions. So, but unfortunately, you know, now the company's bankrupt. All the people who invested their money as a customer and as an investor lost it all. But whatever. Who could have predicted that? I have no idea. Oh no. Yeah, because there's some, you know, those YouTubers out there. But whatever. Yeah. You'll find out the next portfolio update. No way Fabio put 30% of his portfolio in alternative assets. Oh yeah. So, well, you might not know what those alternative assets are, but Mlada, you should probably know. You have access to it. Go check out the call, and then you'll know. You'll be caught up basically. The last call, it was posted on Monday, so go check that out. Oh, you know what they are. Okay, I was like, how do you not know what they are? Sorry, boys, I'm gonna spoil it. Oh yes. Okay, so Kingdom just spoiled what the stocks are. It's a firm and lending club, absolutely. Oh, you haven't listened to the call, but yeah. Well, go check out the call and it gives you some more color. I think actually the first 40 minutes are pretty solid macro discussion. But yeah, next year will be the year of the tractor supply. Well, those boring stocks. We talked about how a lot of those boring stocks they do really, really, really well. Oh yeah, no. And Andrew, I told you I was going to bring this up. I told you I was going to bring this up. This is the fact when you introduced me to this, you brought so much joy into my life. So I actually see that people actually take this guy seriously, which is actually funny. Actually funny that people still take the guy seriously. But, it is what it is. Next year, the Fed rate down to 1%. Well, I'm not putting like a percent target on it, but no, it could get pretty nice. The Fed is not really what I'm paying attention to whatsoever. The Fed is kind of an afterthought, and I'm with Buffett on that. Buffett's right. Buffett's like, don't pay attention to the Fed. I'm all for that thought process. Oh my gosh, Nash, you're trolling with Perry. Perry's done really well. But yeah, there's also, well, I might be adding that to it, but by the way, guys, there's a holding company that I also own that I actually started doing as a you know what? I'll have this discussion. This is where I'll finish off the live stream because I think I don't have a video. I'll make a video because it's still a black box, but I'll kind of discuss basically what the community really entails. But it is a kind of a pain in the butt to a lot of people to join, and that's on purpose. By the way, that's how it's meant to be. I don't care that it's harmed the growth. It's actually kept the quality of the community really strong. And by the way, congratulations to everyone. And just like the past couple months, I'm not even including what it's been like before now, but we've surpassed, just in the past couple months, the head moderator has told me that the discussions have, in terms of messaging, has passed, in just one chat room, has passed over 100,000 messages. And considering how like, well, it's not, I wouldn't say it's small. Like, I think the entire community is like, geez. I guess, but you guys do follow Pareto's distribution in terms of the activity. It's like a square root number of the amount of people in there do all the activity, but it's like almost 600 people. And then in the deluxe, I think we're close to 70 people in total. But again, it's purposefully meant. And if you're stuck in limbo, you have to follow the instructions. I think the instructions are fairly simple. You have to answer 3 questions, and then you have to pass an interview process. So those are the 2 steps. Again, I'm going to make it like a dedicated video. Should be like 5 minutes at most, 3 minutes at most. And then, you join the community. It is free. And then there is a non-free option, which I have a call on Sunday. And then there's like articles that are written for it, which, by the way, I got to write the article on the bond market. That's missing, but Spurgeburb, ha ha ha, lafufu. But anyways, that's going to be pretty much my gist on it right now. I know it's a black box, and people have complained to me about it being a black box. I'm just like, I'm sorry. I am terrible at that. The interview process is not business casual. It's very informal. Your voice is necessary. I don't do most of the interviews. Occasionally I'll do an interview, but I don't do most of the interviews. It's geared not towards your experience level or your skill level. It's geared more towards your character, stuff like that. That's what it's been instructed to be about. And yeah. What I'll do is maybe I don't know. I feel like if people had questions on it, I feel like I want to give them the opportunity to answer questions. Maybe I'll just say, okay, when I do that video, people can ask the questions about the process in like the comments section or something like that. I don't know how to do that. I do not interview in a bathrobe. So, no, you will not see me in a bathrobe. You will not see me in a bathrobe. But anyways, I'm very proud of it in terms of like kind of curtailing it. Cause again, like you guys are, you know, awesome in that case. And the activity is like pretty stellar. Cause I know that there are way larger YouTube channels and their activity is like super low, for whatever reason. I don't really know why. And so that's like the true value I think that, you know, this YouTube community has provided to me. The best value is actually like curtailing that community, and all of these people, like there's a lot of you that have really subject matter expertise in something, and then I'm learning something about, you know, something from every one of you, and that's great. And then we all kind of like share it together, and you know, because the purpose, like, oh, go figure, what we want to make money from our investments. Anyways, I'll ask the last, or I'll follow up with the last bit of questions. Monty Python, to see the 3 questions we ask you. Oh yeah. That'd be funny if those are based or the inspiration of the questions. Interview process is what your favorite. Let's see. Half Windsor, Fabio interviews you in a bat. Yeah, I already answered that question. Wait, want to make money? No, I'm a TTCF expert in the Discord. Yeah, that's actually true. If you go on the Discord, Nash will be the TTCF expert. So like you ask him anything about TTCF, he answers in like 5 seconds or less. It's pretty crazy. I asked them the other day, I was like, hey, what are they selling for in this specific target location in this specific, you know, zone? And then, you know, they're like, oh, it's this price. And he sends me a picture and everything, an update. All right, guys. I don't see any further questions, but I'll wrap up there. Thank you guys so much for, you know, joining me here today, and we'll see how things go. We'll see how phase 2 investment strategy goes. I'll see you guys there. Well, let me see. Where did I put this?
Okay. We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.